Hey, Merry Christmas. I hope everyone is well and preparing for the holidays. So, we have family coming at Christmas Eve and Christmas this year. I feel sorry for my wife. She's doing all the cooking and the traditional seven fishes on Christmas Eve. I told her I would help. It's always nice to see everyone together at the holidays, though. So, about the stock market. So, the Grinch is in full effect. The fact we raised cash and invested in some ETFs that benefit when the market declines was the right idea, but now I wish we had done even more. But we also have that cash that can be deployed at hopefully at lower levels in the market. The fact that the markets did not have a good year in 2022 is really not a surprise. The Federal Reserve, in my opinion, and it would be hard to argue this opinion, is intentionally killing the economy after they allowed it to expand way too far and too fast. This year, in 2022, the Federal Reserve has raised rates at every single meeting they've had. They have never done that before in history. It's a first. And I won't go into a lot of the detail, but I believe this is a problem for the economy going forward into 2023. Of course, just like the Fed caused this decline and expansion, they can completely change their mind and start lowering rates again. But if not, I think we're going to have more problems, especially since they want to raise even more. I don't see any way housing doesn't fall off a cliff in 2023 as an example. The 30-year mortgage went from 3%, now approaching 7%, and soon to be going higher, says the Fed. I feel that we'll likely see more financial pain in months to come as a result. I'm concerned about decreasing future earnings and layoffs as well. See, when debt costs increase, which is what happens when they raise interest rates, it means money costs more. In turn, that means it costs more to keep employees. It costs more to grow the business. It costs more to do everything because people operate on debt. And I believe as a result, spending is going to decrease across the board. Here's an interesting fact. The stock market since 1960 and every year preceding midterms has never been down in the following 12 months. In other words, from last month, November, since we had midterms, moving forward until next November 23, the market has never had a loss in the preceding year of midterms since 1960. Will this be the first year it doesn't have a gain? No one knows, but if the Federal Reserve keeps up, which they say they are poised to do, it seems certain we're in for some tough times. The good news is I've started a partnership with a very large registered investment advisor from firm who have products that we don't have access to until now. I might even join that firm if things keep proceeding as they have been, and this will be great for us all. This flag likes to keep hitting me in the face. It wasn't windy when I started this thing. So the first product we're rolling out, I think, is pretty appealing. Tell me what you think. It's from Credit Suisse, which is a huge company, and it's sort of like a CD. You have to tie up your money for 18 months, but you earn credit by the S&P 500 rising in value. This month, and it changes monthly, you can make up to 18.5%. So if the market is up 30% in the next year and a half, you make 18.5%. If the market is up 15%, you will make 15%. You will earn whatever the S&P 500 earns up to 18.5%. If the market is down for any amount, you will not lose a dime. I'll likely invest some of our accounts in this product in the coming months. Okay, that's it. Please reach out to me if you have any questions or thoughts, or you'd like to discuss this new product or any of the other exciting things that are happening likely next year. Merry Christmas again, and I really wish you a great and happy New Year. Thank you.